Yo, yo. What is up? Happy Saturday to everyone. Okay, make sure you guys are in. So, the format of this and moving forward, we're going to go over earnings. We're going to go over economic news just so everybody isn't, unsure of what's going on. And then we'll bang out a few charts. I have a couple of things that I'm watching, but if you have anything that you're watching or you want us to go over, I would be happy to do some of those within reason. We're looking to get, 5 to 10 tickers done. We are not trying to chart the entire stock market. So to get started, can I just confirm that everybody can see the earnings sheet here? Sorry. Yeah, cool. All right. So as far as big names going into next week, obviously Tesla Tuesday after close, Google Tuesday after close. What else do we have? American Airlines, if you're a meme stock guy, Southwest, if you're cool with them only running Windows version from 1990, which is the only reason their systems didn't crash. And that's pretty much it for big names. Chipotle on Wednesday after close is usually something worth watching. Keeping that in GM in the morning Tuesday. Keeping that in mind, anything that has earnings this week is probably not something that you want to touch until after earnings. So contracts are going to be juiced. If anybody was looking at Netflix last week, you'll be able to understand that firsthand. Anything that's at the money is going to be 4 or 5 times what the normal price is going to be. And if you buy something and it goes in the opposite direction, you're going to get IV crushed and get blown. So if you want to play earnings, it's kind of a crapshoot. Even if they're bad, it can go up. If they're good, it can go down. Worst case is it stays flat and you just lose value because of IV crush. So that is always a lotto. There's very few surefire earnings plays, regardless of your methodology there. So keep that in mind. We're going to have a couple big names, which means that the market might move a little bit slower as those names tend to consolidate before earnings. We tend to have a move the week before, and then the day or two before, it's just kind of flat. Not always, but that's just what it looks like. Going into news for next week, Monday looks pretty clear. Tuesday, existing home sales at 10, so 7 PST. Something to watch. About it on Tuesday. Wednesday looks a little bit more packed. PMI PMI pre-market. No, PMI right after market open. So 9:45 Eastern time, 6:45 PST. So that's usually something that's going to move the market, as well as home sales, which is at 10. So first 30 minutes or so are probably going to be interesting. Wednesday. And then we are pretty flat. Bowman speaks after market close. Where else? That was Wednesday. Thursday, jobs, durable goods, GDP price, GDP growth. All of those are pre-market though. So that'll be interesting, definitely enough to move the market. So Wednesday, Thursday, looking like market driven. Wednesday is within the first 30 minutes of market open. Thursday is pre-market by about an hour. So we might have a little bit of difficulty trading Thursday unless there's some big action. And then Friday, personal income, personal spending, PCE, all pre-market as well. So, and then Michigan consumer sentiment, which also tends, or at least lately, has been impacting the market. And that is at 10. So that's half an hour after market open. So end of this week is going to be interesting. Definitely some economic activity. You couple that in with a couple of big names. I mean, the Tesla Google day is definitely Tuesday aftermarket, right? Going into Wednesday market open news, going into Thursday pre-market news, going into Friday pre-market and early morning news will be quite interesting. So just keep that in mind. Monday, Tuesday could be a little slow because of all that stuff going on Wednesday, Thursday, and Friday. So cool. Now we know. What do we have on Globex? Anything? Existing home sales, it's all US. I don't know how much the Australian reporting is going to move the market. All of that is end of week. So Wednesday, Thursday, Friday are going to be interesting, probably pretty volatile because of the news activity. So something to keep in mind, don't get caught with your pants down, being in any trades or any swings, knowing that we have pre-market news that you might not be able to trade. If you are swinging stuff, make sure that you're up for market open. Even pre-market would probably be more ideal. Then let's move on to this. This is the first time I'm actually going to chart using full screen here. Just want to confirm. Can you guys all see my screen now? We're on the IBKR charts. Sweet. So last week we were watching AMD, NVDA, Amazon, SPY, QQQ. Emilio sent over XOM and Coin. So we're going to go through that. For the most part, this is pretty easy. I really do like, so we're on the hourly candle, just so you're aware. What are you doing, Cat? Remove all trend lines. So hourly for Amazon, we're clearly in a downtrend, right? Lower highs, lower lows. So something to keep in mind. On this hourly, we can definitely see right around 181.5 that we were pretty consistent. Where are we? Pivot point. Sorry, this is pain in the butt to do like this. 181.5 is probably the level. I mean, you can see all of Thursday and Friday. That was the area of support. Because we are in a downtrend, I'd like to see either new highs, right? So as soon as we break over 185, we're starting to invalidate a downtrend. And then we can look for that 181 to maybe be a support as we go back up. However, right now, because we are downtrending, so high or lower highs, lower lows, I would say that the more likely play at this point in time is going to be a breakthrough of 181.5, to which we would want to go down under it, come back up, and reject it from the downside. So right now, we've only seen it as support, and for over a month, about a month and a half, is resistance over in July for a little bit, and then again in April. So in this previous run, so basically since the start of July 4th, we haven't really tested this level from the downside. So if we're looking for puts, because we missed the initial entry at the top here, the next spot that we'd want to look at is a rejection, right? So come through it, reject 181.5, and then we can look for downside momentum, probably another 5 or 6 points up until 174, somewhere in this range. Still, this gap was filled. So there's no gap to fill, but I would definitely be targeting those lows. But because it's an area that we have used as support and resistance, and we did kind of consolidate a little bit on Thursday and Friday, near the end of Thursday and then almost all of Friday. Anytime that we see this at a strong level that's clearly been supported, we can start looking for a rebound here, right? So again, we need to make a higher high, so we need to break 185. We've already touched, so basically we're going to go, I can't go over to the right, but we'd go up, break over this somewhere, come down, and as long as we find a low that isn't under 181 point or 182, I guess, we could say that we have a higher high and a higher low, and we have the potential to go back up. But at this point in time, the 181.5 level is kind of the determining factor for me, and we need to make a higher high to even think about taking longs here. Boom. All right, next. We'll check NVIDIA. So similar situation here. We can definitely see some sort of support with no real downs, no real resistance proof as of yet, but somewhere around 118, we've definitely been holding and rebounding off of. We did start to break and make new lows under it Wednesday and Thursday. But again, pretty tight consolidation, ranging about 3 points on the video over the last 3 days. Over that, what, cat? Sorry, my kitten is saying that I'm wrong. 2 seconds. Come here. Come on. All right, so 118 right now for NVIDIA. I'd like to see either don't smack me in the face. Either break that or hold it as support. We do have a pretty obvious gap here to fill between 122.5 to about 125.25. So gap fill potential is on the table, but we also seem to have, looks like we cleared that. We definitely have downside gaps on NVIDIA. NVIDIA definitely had a run where we were just gapping up all the time. So we have a pretty massive one at 95 to 101. Another teeny tiny one from 109 to 112. So I'd like to see where we open up at the start of next week. 118 is the main level here, which is what we're sitting on. So Amazon and NVIDIA both sitting on levels where we can bounce or continue down further. If we see both of these levels start to give up, and I'm sure as we go through the charts, we'll see a couple more like that. If you have multiple tickers that are relatively large holdings in something like QQQ or SPY, and you know that they're all resting on pretty important support levels, if they all fail that, you'll see a large sell-off on the indexes, right? They're comprised of these tickers. So if in succession you have several things that are all trying to hold support, they all fail support, you can get a pretty strong flush across the board. But the opposite is also true. So we can rebound on all of them and send it. And then the last option is, some break, some hold, and the market is just relatively mixed. So we definitely have some individual ticker plays. I like NVIDIA. I like Amazon. We're areas that are pretty crucial. So we should get movement either way. So that's worth watching. AMD is pretty ugly in relation to the other two. Like if we go back and we look at NVIDIA, very clean, right? You can see a very obvious individual level. There's no other level here that you even have to think about. The same as with Amazon. AMD, not so much. AMD is a little clunky. Lots of action, just super choppy. And this chart goes back to April 15th. So not a lot of linear movement here. I'm gonna probably not touch this until the chart clears up a little bit. And I think the same is gonna happen with Tesla unless we had a big enough flush. No, this is pretty clean. Not great. Not a whole lot of proof here. Only had about 3 hourly candles actually touch this area, but I think that at first glance, the obvious area of support is exactly what we're holding. So I don't think that that's a coincidence that Amazon, Tesla, NVIDIA are all kind of doing the same thing. 239, right around there, right around where we're holding. So we kind of picked up a little bit at the end of the day on Friday. But 239, we can start seeing some pretty massive flushes on Tesla. It's definitely had a strong run. I think it had the best run out of almost any of the large cap tech stocks. Like we're looking at today is the 20th of July. So from the 11th of June, so about 6 weeks, it's had a 62% increase, right? So it's definitely been running. I would love to see it hold here so we can try and catch a bounce to the upside. But again, I think if this starts selling off here, there's not a lot of proof that there's much support to the downside. So we could flush all the way back, come back down to 200. It was uglier when I was trying to chart this Thursday, but now that we've come down, I actually kind of like this. So Tesla 239 main level. Amazon 181.5, NVDA 118, AMD I'm staying away from for the time being. And then let's pull up Exxon because that's what Emilio was texting me. What's Emilio saying? Exxon looks good. 115, 116 hold. Yeah, I see that. Not as clean again as those tech charts, but I could definitely see what he's saying. 116 being a relatively clean level. So it's very obvious that it's held right around there for support and resistance across the board. Massive selling though. So I mean Thursday and Friday was just straight red. So if we hold 116, yeah, I think that there's some upside potential to this as well. But again, any level that's been continually supported over the last few months and is shown that its support and resistance can very easily go either way. I would probably hard for me to have a long bias on anything. Like I would love to see it support, but given the last IBKR is yelling at me saying it lost my connection. Let me see if that impacts this. I see what he's saying. He's saying 116, 115. If we hold, we can go long. I don't think this is as clean of a chart as say an Amazon or NVIDIA, but it's definitely there. This is the pivot point you can see over the last 2 months. So 116 at the very least is something to watch. So the way that I do levels, right? A level for me is just an area where we need to watch. I don't think that price action is necessarily going to go to 116 on the dot and do something. When we get to these areas, you have to take some further analysis. It's just if you're staring at a chart all day, there's going to be times where there's really no point in looking at it. It could be ranging. It could just be in a mishmash of, crappy range. And all I do, and the only reason I'm creating levels is essentially I would take this and I'd go and I'd make an alert. It's like when we are here, I'm going to watch for something, right? And when you know that you're at a pivot point, so the AMD, the NVIDIA, the Amazon, the pivot point. So where you've seen support, where you've seen resistance at this level continually over the last couple of months, you can't go into it with any sort of implicit bias. So Emilio is saying that he would like to go long here. And while I think that that is an option, I think that whenever we determine one of these levels, because all we can do is say, hey, this level has been tested as support. Oh my God, IBCar is freaking out right now. Just keeps, can you guys hear that? Or is it just in my headphones? Because it just keeps going market data loss, market data reestablished over and over and over again. Because if you can't hear it, it doesn't matter. Okay, cool. It's just annoying me. I'm going to turn my volume down then. So when you get to these levels, right, and you have proof that they've been support and resistance, there's no point in just thinking, oh, well, it's going to bounce here and then we go up, right? Every time that I chart, and you guys can see it even in my channel, it's like the way that I look at things is a level is just an area to watch for, I wouldn't even necessarily say explosive price action, but it's an area to watch for a potential change in the current trend, right? So, or a potential entry spot. So when we're looking at this and we say here, it's like 116 is a very clear pivot point, but I don't think that you want to I don't think that you want to ever take a level and just go, oh, we're only looking at calls here. Oh, we're only looking at puts here. If you have a good enough level, you should be able to have a relatively convincing arguments for calls and puts at it. And it's always just better to have both sides. So it's like you can see when I do my daily watch list, I'll usually take a call and a put for the same contract based on the same level. So you never want to be stuck in your head thinking, oh, we only want to look at calls or oh, we only want to look at puts because you're removing 50% of the potential outcomes from what can happen. And that's very limiting to yourself. I think that you need to go into all of these trades and look at all of these levels from both sides so you can be prepared for either one, right? There's so many times people have said, oh, I haven't even looked at puts or I haven't even looked at calls, and then they miss the whole move. It's like you just make it easy on yourself, look at the potential outcome for both sides, and it makes life significantly easier. Again, Lots probably can change across the board between now and when we open on Monday. So all of this is just, taken from a snapshot in time. We could be gapped up, gapped down, whatever. So at this current point, this is what makes sense. So Emilio said 116 and 115. No, that's just a level to watch. He wasn't saying anything about contracts. There's nothing about averaging down. On something like Exxon, if you're buying a contract and you're letting it go down a whole point, right? You're probably going to be toast anyway. A point's a big move on a stock that's only worth 116. That's at that point, I feel like you could say that your trade is probably pretty close to invalidated. So he hasn't said anything about contracts specifically. What else did he say? He said coin, and he was looking at coin for downsides. All right. Sorry, I have people in my house apparently. Oh, Sion, what the hell is this? Imagine charting something and you just can't fucking spell. Beep boop. Coin. What did he say? He's looking at bills 200. Yeah, what's he saying? Emilio said coin good for shorts if it can't break 260. I would say that you probably would look closer to the double top here. So Emilio's saying 260. We'll chart it just because we like the guy. That's kind of where we tapped Hive Day on Friday. But coin also ran 11%. So there's some very clear momentum going into Monday. Assuming there's no hiccups on the Bitcoin front. I would say if coin fails between 260 and 264, we can be looking at a triple top. Why are you saying AMD? We already did AMD. Or said we didn't want to do AMD. Did Starbucks have earnings last week or did Starbucks have earnings this week? I know I saw them somewhere. I can't remember. Where did I see them? Didn't I see them? I'm losing my mind. Maybe I didn't see them. Mm-mm. Hmm. Okay. Let's do Starbucks. Whoa. What the hell happened here? That just makes me generally uncomfortable to trade anything after that. A 6 point move in a day, or sorry, 6% move in a day. I think I remember somebody saying something about they brought somebody on board. I don't know if it was a CEO change or what, but there's definitely some news to drive that. I personally wouldn't touch this. I don't like I don't like the idea of taking something that's not my style of trading. That'd be more momentum trading. And like that's where you have a situation like a GameStop where you have a 10 point move one day and a negative 15 point or percent move the next day. If you're looking at it purely from a level standpoint, there's definitely something right around 79. Not the cleanest, but you can see here one held almost all day on the 31st of May. Held again, held again, held again, broke, flipped to resistance. And then here, I don't know if you can really count this or if it just ran out of juice on Friday, but it looks right around 79 as the next pivot point. I personally wouldn't touch this. It makes me uncomfortable. Your IV is going to be juiced on things anyway. So that's a play at your own risk thing. Like when you have a stock that moves 10%, that rarely moves, more than why is my mouse tripping out? More than a couple dollars, your IV is going to be jacked up. So you're going to be paying more contract price for the same value. Volume is nuts. Look at this volume. You haven't seen that since the day it gapped down. That's wild. Yeah. 79 is the level to watch here. I mean, it's hard to really say anything when you have a 10 point or 10% move in a day off news. News can go either way. So use at your own risk. Adele. Adele. Mm, yeah, this isn't great either. Technically, on the 1 hour, you have a higher high, higher low, but overall, definitely down. Is there anything clear here? No real great levels. 122.5. So where it bounced on Thursday was kind of touched, but upside, like this is choppy. You might have something around 130. Not a great chart here. 130, which is also the gap fill, 132. I don't really like this. Why are you looking at Dell specifically? Do you have like a reason that you're watching it? And yeah, I'll do SPY, obviously. I'll get there. While Joe lets me know why he's watching Dell. So I only use SPY for SPX and ES. Yeah, I would be hesitant on longs as well here. I'm not. I think that short term, yeah, you're looking at a higher high, but it's marginal and the rest of the chart looks pretty wacky. Yeah. Yeah, I mean there's just no consistency in this whatsoever. Look, even in the hourly on days, like it's pretty range bound. Almost every massive move up is met with a bigger move down. So sorry, when you trade ES, yeah, you can use SPY. I prefer SPY for everything because SPY shows volume. It depends on what you're using and what you're actually playing, though. ES can be good to watch because it's harder to convert SPY to ES because the contract value is always changing versus SPX. SPX is usually pretty consistent. Um, Having both up is never going to hurt you, but SPY is good for volume just to see where volume is coming in at what price level. They should mirror each other relatively well, but it's never going to be exact. SPY, it's good because like SPY or SPX, then you can go and look in at options contracts as well. So there's a little bit more information in those than just checking ES by itself. The goal of everything is always to have access to as much information as possible. So it's like when we're trading SPX, I always look at SPY because there's less information on SPX than SPY, right? Like SPX has no volume. Both of them have options contracts. So you can take both of those into account, but you can't see individual candle volume on SPX because it's a derivative of SPY. So I'm always watching SPY. SPY is usually the main thing that I have open when I'm watching all of that. SPY 1,549. Again, we've had such a solid run up over the last few months. It's hard to find levels that are both support and resistance. This might be one of those spots. We've had a pretty decent pullback. We pulled back about 3% in a couple of days. So like in a very short amount of time. This 549 area is really the only spot right now that we can see that's been a support and resistance. The next one that you might have is closer to what is it, 543. But even that, let's remove this, was only tested briefly. Daily is not giving you much more insight. It's hard because we just had all-time highs and like consistent run up. So we're few and far between But I mean, like if you look previously, so if we're going over here and saying that, there's only a little bit of evidence supporting 549 as a support and resistance, the same thing happened over here. So March 21st, where we had that previous all-time high, came down and then ripped through and then used it as support and then went. So this was definitely an all-time high for a much shorter amount of time, right? But same concept could apply. We could bounce from here. So SPY's been pretty difficult to trade lately, at least with the methodology that I tend to use, because I like to look at levels that are continually showing as beneficial to us, or at least reactionary. And when you're just continually breaking all-time highs, you don't really have that. But I mean, it is pretty clear right here, at least that 549 was right around there. Boom, sell back off 7 points. Boom, sell back off 7 points really quick, breakthrough. So if we finally start, and we didn't really need to test it on the third, right? It didn't really hold per se, it just kind of kept going. So this would be the first real challenge to see if we can flip this from a very obvious resistance into a support. If not, so if 549 does not hold, I think that historically speaking, which again is a pretty small data set here, but I would say that 542 area is 542.5 is probably where we're going to go, which is good because I mean we haven't had like a decent level for SPY to actually do something like this on in quite some time. So 549 is good. And again, this kind of coincides with what I was saying. So it's like with Amazon and NVDA and Tesla all kind of sitting at a spot, like at a pivot point. If all of those can't hold, then we can say that it's pretty safe to assume that we're going to drop, right? SPY is an accumulation of all of those other tickers. A lot of those tickers that we looked at that have big holdings were sitting here, right? They were sitting on a level that was previously a support and resistance. And if they give that up, they're going to flush. If they all flush, SPY's going to flush. So I think that if we can't hold it and all of that lines up, 549 gives up, 542 is the next obvious, and then probably down to this gap fill at 536, which would be a retracement of 5% almost to the dot. Again, though, this goes back to what I'm telling you. It's like you need to know when you can see the lines. The lines are clear. This is as clean as SPY's been in weeks. When you see that, you need to plan. It's like, well, what if we hold it? Where are we going to go? Well, if we hold it, we can probably think that we're going to try at least to get back up to, I mean, we have a gap fill to the upside at 563. So somewhere up in there is probably where my target would be. But we also have to realize, like, if it gives it up, where are we going to go? Right. I don't want to go into this and be like, it's going to hold 549. I'm only looking at calls, because if it doesn't hold 549, I have no strategy for what happens if it breaks and we have to go puts. Right. Every time that you're looking at a level, make sure, if you're going to take anything away from this class, make sure that every time you're looking at a level, you have some sort of idea for both sides. A level is just a point to watch, right? A level does not mean calls. A level does not mean puts. A level means that you are going to take probably one or the other if a certain, price action happens at that point. So in this case, if we hold 549, we can look to calls. If we don't hold 549 and we see it being used as a resistance, then again, we could probably look to take puts. Then you got to think, well, where would it go? Well, where did it go last time? Right? Boom. 542. Upside is going to be a little bit harder because it hasn't been, the all-time high continually breaking is a little bit trickier to trade. But I mean, 555 maybe, still a 6 point move. I mean, I think you're going to clear out of this area, but that's a little like I'm grasping at straws here on where I would want to say an upside target is going to be. All-time high, is an easy one somewhere up in there. That's still 15 points away. But yeah, if you go into something and you already have a bias, you're way more likely to get tripped up, and you're way more likely to only, like, there are certain times where I've seen people and they have a bias and they're like, oh, it's going to go to this level. And then it doesn't hold that level and they still are only thinking of upside, right? It goes down here and they're still like calls. Then it keeps going down here. They're like calls. And then it keeps going up here. They're like calls. And then they get stopped out and they're like, oh, well, now I'm going to go puts. And now it's hit that level that we're looking at puts. And they're like, oh, I'm going to go puts. Nope. Right? you got to let go of the idea of needing to go into the situation with a bias on one side. It can only hurt you because you see people and they're trying to catch it, and by the time they decide it's time to switch, well, it's already at that point that we already identified, and now we can look to calls again here, right? They're already like, now it's puts. Oh, we sold all the way down here. Now it's definitely puts, and then they get faked out both ways, right? You eliminate that happening, or at least reduce the chance of it happening if you already go into these situations with an understanding of what you're going to look at if it goes up and what you're going to look at if it goes down. Because the last thing that you want to do is be the person that's sitting there trying to chase calls all the way down here. And then by the time we sell off to 542, you're like, oh, well, now I probably should go puts. And then you get smoked that way too. But if you see it and you can identify what the game plan is, regardless of if it goes up or if it goes down, and you can play that, you reduce the risk. I'm not saying you can't make a stupid move, but you reduce the risk of being this person that is trying to not give up on the fact that, oh, it's got to be called, it's got to be called. And then when they finally switch, then they get burnt again, right? Remove bias, just trade what's in front of you. Always just trade what's in front of you. It's like that's the hardest thing to do. It's like you go in, you're always like, I want to take calls here. Well, every level that you're looking at, whether it's a breakout level, whether it's, been a support or a resistance, that level is just something where you expect price action to do something, right? For something to change or to show something to you, right? No level that you ever draw is like calls. This is not a calls level. This is not a puts level, right? This is just a level where you can anticipate price action to potentially shift, right? So with that in mind, every level that you ever draw, you should have a strategy for, well, what if we go up through this, or what if we fail this, right? Always a call, always a put, both sides of it, because all you're doing, right? Once you have a level identified, you just need to know if it's support or if it's resistance, ultimately, right? Are we holding it or are we selling off here? It's going to be one or the other every time eventually, right? Even if you range at that level for a bit, at some point in time, it will deviate from there. Are you going up or are you going down from there, right? Have a strategy for both sides. So when it does one of those things, you don't only think about the one side and then keep trying to chase something that's never going to happen. And then let's pull up QQQ here. Mm -mm. Hmm. I feel like this is probably closer 447, right around 447. Kind of have two, but 447 has more touches, and we broke under it, and we treated it as resistance. Hmm. That's interesting that it's so far of a deviation from SPY. QQQ definitely looks weaker. Lower lows, lower highs. Under 473.5. If we show that this flips to being resistance, I think we go for the gap fill here, 468. This is a little tricky because there's kind of like two levels that you can kind of watch, and then the first one looks like we flipped from it being a support to a resistance in that last candle on Friday, which would mean that we can come down, but then the next level is 473. So I think that we need to be over 477, over 477 showing support, we can go long, or under 473.5, we can go short. I think in this range, it's going to be crap. I have a whole system for stop losses based on multi-day expos. That's a whole different class. That's not a charting session. We'll get into stuff like that when we do risk management classes after the futures sessions. We have 3 weeks of futures sessions starting next Wednesday. After that, we'll get into some trading specific for options. We'll go over some strategy. We'll do some hand holding. Yeah, that's a whole other thing. We did that in the master class. I explained to people what I'm leveraging to do that and how I'm determining the contracts. We'll do something similar to that for the server at some point in time, but that's not this class. All right, last minute tickers. I'll take two more, and then you guys are all free to enjoy the rest of your weekend. Or no more GameStop. I'll do it, but what a waste of a ticker. Don't trade it. Okay, there we go. Next. I mean, I don't know. Do I like Tesla? No. Yes. We went over Tesla already. You'll have to watch the video. So I do like Tesla. Actually, I'll just do it quickly for you because I saw that you just came in. GameStop over 25. But even then, it's like don't I don't know. I got nothing for this. This doesn't even follow the chart. The chart doesn't even matter on GameStop. So, I could tell you 25 looks good, but it doesn't mean anything. All right, Mikey. So here's what I was saying. Over 438.5, 439 area. So that's the main level here, right? Right around sorry, 239. If we hold it as support, I think that we can bounce. If we break under it and show that it's resistance, I think we sell off at least to 231, maybe lower. But that's the main level, 239 right now. Easy. All right, Joe, you gave me GameStop, so I'm skipping SMCI, PLTR. This doesn't look terrible. Oh, it's such a small stock, though. I hate that. Makes this harder. Yeah, that's kind of iffy. Lower highs. Like right here, we flipped higher low, higher high. Then we flipped back lower high, lower low. Then we flipped back higher high, higher low. I mean, this is just I don't really like trading anything that has under like $100 value. I find that the contracts are I just don't get what I want out of it unless I get lucky with the move. This is yeah, kind of ugly. It's like we have 10%, right? 10% difference from this low to this most recent high, and that's 2 points, 3 points. I don't know. I don't if it holds 28.5, maybe long. But again, this isn't something that I really like trading. It's too unpredictable. What we have for larger time frames. Main nice thing that would be a hold of 27.5, which looks like you kind of got over here. Under that, under this 27.5 level, it's definitely looking like a sell-off. But like what are you gonna do with this? What is this? 3-day gap up to gap down? Gap, gap. Like I don't like stocks like this. Just look at this chart. What is this? Gaps all over the place. I want something that like trades with relative consistency. This right here, what is this? I don't know. I don't like that. Not for me. All right, I'll do AVGO and then hop off. That's three. Three extras for you. Oh, what the hell? I got I got nothing. This is a don't touch for me. Like again, I've never even seen a blue. What's this blue crap? I've never even seen that. What's this mean? What the hell? I don't like this chart. This is not for me. I don't know. What would you say you'd do here? Like, really? What is this? A split, but yeah, there's two. Really? How do I see what that does? Give me info. I don't know. I don't like the chart, regardless of what it is. The too many gaps, too much uncertainty, no consistency, no levels. Look at we're trading in a gap. So my whole thing is look for levels. Like there are no levels here. There's just nothing. It's just gap, literal gap. I'd wait till it comes down and hangs around somewhere over there. But right now it's 156.5 that holds. But I mean that's like there's one instance of that happening. I don't I wouldn't touch this. All right, Allied, I'll do Rivian. Y'all with your gappy ass stocks, huh? I don't really see this would be a stretch around 18 and a half. This isn't the worst. I mean, it's pretty wide. Somewhere here to like, it's actually not bad. 15 and a quarter, 15.2. But that's pretty far away for something like this. That's 10% down. If you don't like trading stocks that are $20, you're gonna really not like trading stocks that are 15. From an options trading standpoint, I don't think that it really warrants it. From a, hey, do you want to hold this in your long-term portfolio side of things, something under $100? That totally is going to depend on if you believe in the company. If you look at the existing action of the stock, it doesn't look good. But if you look at Carvana, right, and I was bringing this up to Emilio the other day, we don't tend to buy things that go from massive highs to basically nothing. But Carvana peaked out at 378, dropped all the way to $1.90 or $1.70, and then now it's back up at 131. So maybe Rivian is a case like that, 180 to $15 to 1,000, who knows? Doesn't usually look great, right? When you lose 99% of your stock value, or I guess in Rivian's case, 90%, maybe a little bit more of your stock value, um, to create a case for buying anything, right? Usually companies that do that are just headed straight for the grave. Clearly you can see recoveries occasionally, but if you like Rivian and you think that it's a good company and you think the leadership is good, sure, buy the stock. Is it something that I would look to trade options on? No. And I'd probably say the same about PLTR, AVGO, even. I don't really personally like to trade. I've done it. It's only beneficial for AVGO because the actual price is of the stock makes it, it makes decent enough moves that options trading is viable. But Rivian, again, 93%, 90% where we're at right now from all-time highs. Mm, that's a use at your own risk situation. Options would be off the table for that for me. That's pushing it. When I'm saying like, oh, I'm going to take a lotto, it's not like this. It's something that I know could at least feasibly make the move, whether it be on the outside of possibility. But this is something that you're buying because you like the company and you're going to hold the stock. That's basically what I would equate that to. All right, friends and family, that is it for me. We did probably like 10 and 50 minutes, went over the economic calendar, went over some earnings stuff, and yeah. So I will be uploading this video to you or yeah to YouTube so we can see it. Going forward, I'm going to be running charting on Saturday still, probably around this time, but we're going to be doing it on YouTube Live. I'll have my camera on. You guys can see my lovely smiling face as you show me tickers like Rivian, to which I have to be sad about. And yeah, we'll keep this going. Again, any tickers that you have for next week, it's always beneficial to let me know in advance so I can maybe pre-screen it but yeah, we did good. I will catch you all Monday morning. I'm gonna try and hop on DC for everybody at 7. I still do not know where Hassan is, or what Hassan is doing, or anything about Hassan. So it's going to be Emilio and myself leading. We're also bringing on another futures trader, and then maybe getting some of our current team to hop on some futures. I'm looking for some people that do NQ on top of ES. Some people want some NQ action, and then we are also currently looking for another signaler for options, ideally something that is more Emilio's pace with the small account challenge or smaller contract value. So if you guys know anybody, hit me up. We're always looking, trying to build out the team, build out the education, and kind of get the wheels spinning here to get everybody what they want. All right, y'all. Enjoy your weekend. Go touch grass. I'll see you on Monday.